Welcome to Markets Now. I'm Michelle Rook with Vince Boddicker with Farmers Trading Company. Grains are all in the red here today, and we've seen a little bit of back and forth action here in the livestock futures and are currently seeing kind of a mixed trade in the hogs. Cattle are trying to hold on to some gains. Vince, I want to talk about the grain trade. Soybeans down here for the second day. A lot of this is kind of tied to some of these rain forecasts that we're seeing in Brazil. So we're taking some weather premium out?
That's what it sure looks like, Michelle. And when you're getting close to it, always before we were 2 weeks out and it never happened. Now we're a few days out and the forecast is still there. And it sounds like cooler temps also when you get in even though we got better rain chances from what it sounds like, it's still below normal on that one till you get into the 8 to 14 and that gets more near normal. And then if you cool it off on top, you still got some damage I'm sure you've done and things, but if the rains come, that's all that counts for the short term.
Yeah, and the last time you and I talked, obviously, we had this big run in soybeans in the meal market, which made new contract highs earlier this week. And so this is just kind of spurring some of this profit taking that you expected, isn't it?
That's what it looks like. And when we talked last time, we talked about the normal fall rally into the middle of November of 80 cents to $1.20 in the beans, and we went $1.28 as of Wednesday morning. And I'm just not sure there's a lot more to go there, even if we were with the rains in there. But now we just got to come back and say, do they come? If they don't, we'll make a pretty good reversal next week, I would guess.
Yeah, no doubt. So if, like you said, if we don't get the rains, if they don't confirm, this thing could get fairly explosive in a hurry, couldn't it?
Yes.
All right. So, the corn market, what about that one? Because corn feels like it's been more a follower of both soybeans and, of course, the wheat market is down here today. And so, where's wheat's influence coming from?
You look at the corn market, we're down again today. It's one of those markets that fundamentally just doesn't have a lot of good things going for it with the production numbers we have, with how we're looking. Export sales on Thursday's report were surprisingly well, but we need to continue that. Ethanol is good, but it just feels like it wants to go lower in here. But when we get down within 4 or 5 cents of those lows, there's been buyers. Loans are there. Great. Technically, you've got some divergence that make you want to be a little friendly, but for myself, just hard to get that way with what we have out there for supplies in that corn market.
Yeah, and some of that supply pressure coming from the fact that a lot of the bins are pretty full already, aren't they?
They are. And we look at last year, we didn't have a lot of bunkers that were full in our part of the country or a lot of the country, and I think this year you do. And as we talked earlier, we can get back east. We've got wet corn that's not harvested, and the elevators aren't open all that long because they get the wet corn in and dry it, so it just makes it tougher to get it done.
Yeah, and then we're not moving necessarily a lot of corn right now because of the Mississippi River levels being low, but at least the weekly exports look like they're picking up. How encouraged have you been by that?
I think that's great, and that's what we need. That's been the problem for the last year and a half almost in the corn market. We're just not going any place and getting much done. If we can pick it up and consistently do 1.5 million or better every week in the corn, we can go a long ways to clean it up with the ethanol demand that we have.
Yeah, technically we held the earlier week lows here so far, but can we hold those with corn or with wheat and soybeans both dragging that corn market with it?
I think maybe for today we can. Coming into early next week, if they both want to be weak again, it's going to be tough to do, I would guess.
Yeah. And we are seeing more new contract lows in Kansas City wheat here once again. And how much of that is just due to this continued poor demand that we're seeing in the market?
I think that's a lot of it. And again, even though we keep going down, we're still higher priced than most of the wheat in different parts of the world. We look at France on their production. They're actually wet after being dry last year, so we don't have a lot of worries there. And I think we just got to see what we happen. The other thing we have to look at in that wheat sector is, as of last Friday's commitment to traders report, Minneapolis wheat managed money was 31,000 contracts short, which was record. Yeah. And I'm guessing they'd sold some more this week.
Yeah, I saw that was record. And so that was kind of a surprise. So the question is, how much farther do the funds want to push the short positions in any of these classes of wheat?
I think you look at it, and if we just try to think back historically when we've been in downtrends in a grain market or livestock, whatever it might be, you get those directional funds. When they get moving in a direction, they're going to, in this one being down, they're just going to keep selling till they get punished.
Yeah. Cattle market is trying to recover a little bit as we head into this cattle on feed report, though. What do you think? Is most of the bearishness already factored in here, especially that placements number, or not?
You never know from a psychological standpoint, but I think the numbers have been out there long enough. I think they've been traded for the last week or two. There's still a lot of fear of what happened after last month's cattle on feed report, and worried about it happening again as we're looking at bigger placements. But again, I'll urge everyone to really know how to look at a cattle on feed report. When you're going to have maybe 6% more placements than a year ago, doesn't mean you have 6% more cattle, which is how most people read it. Just says we're placing them at a different time. We still need to focus longer term on those inventory numbers, on what we actually have.
Yeah, absolutely. The placement timing is a little bit different perhaps this year than it's been in past years. You also suggested to me before we went on that part of the break yesterday in that market was due to a cyber attack. So talk about that.
Looking at supposedly JBS had a cyber attack, and we had this a few years ago. I think it was with Tyson. We had a big break, and then we had a nice recovery. And hopefully we can do the same thing in there, but I haven't heard a lot more about it than just rumors of it happening. But it seems like whenever we have something and we worry about maybe a procurement disruption, we get quite excited and take just get out of the long positions or short it and see what happens.
Yeah, seems like the funds don't need a whole lot of reason to get spooked and get out of this market right now. Conversely, Hogs, what do you think there? We do have bigger numbers that have continued to kind of come at the market, yet technically the market has been able to kind of get up into the mid area of this big trading range that we've been in. Can we keep going, or are we going to stall out here now?
I think we're going to continue the chop. We're a bit oversold yet in the hogs, and we could get some downward pressure. But as you noted, I think we've held well in light of the numbers of being 1 to 2% higher than USDA had projected in some of those hog and pig reports. And we probably have another 4 to 6 weeks of that coming at us yet. But if we can hold together and not put new lows in, or not by much in that time frame, I think we'll do some good things. As we also talked earlier, when we looked at USDA's WASDE report, they did talk about a 550 million pound decline the first half of 2024 in pork production. And if we get that, I think it's something like the third largest decline in the last 20 years, and that should be helpful. We just need to keep that export market up in the hogs like we've seen over the last several months.
That drop in production, do you think that's tied to this sow liquidation? Is that where USDA is coming up with that number?
That's my guess. Weights have come up and almost to where they were last year again after being below it, but I think that's most of it. We just, over the last 20, 25 years, we just really haven't seen any herd liquidation in the hog complex, except when you had disease. Now it's economically hitting them hard enough that they're saying, hey, I've had enough.
Yeah, no doubt. Oh, good insight. Thanks for joining us. Vince Boddicker with Farmers Trading Company. That is Markets Now.